Joining us now, we've got Jay Woods, Chief Global Strategist, Freedom Capital Markets, who always has great insight on market action and beyond. So I know coming into this, we teased talking about Nvidia, which I'll get to that in a moment. But at the beginning of this week, you sent out your weekly newsletter. Yep. You talked about the market passing the crawl and walk test. Yep. We've seen a little bit of pushback now. Where are we with regard to, are we still in walk phase, and when do we get to run? What are you watching out for there?
Well, run means let's get to new highs. I don't think we're in that phase right now. We're walking, we're taking a gingerly stroll just above the 200-day moving average, looking around. For those that called for that V-shaped recovery, for me, it's not a full V until we get to new highs, and I still think it's going to take some time. We have a lot of headwinds coming up. We saw one with the 20-year Treasury auction yesterday. Like, come on. I do not pay attention to the 20-year Treasury auction, but the market sure did. The VIX spiked a little bit. So we thought maybe the Moody's downgrade would stall this market. Very resilient, but we still have to watch the bond market. That's the tell. And the one thing I'm worried about now is the 10-year yield, because if you look at it like a technician does, it's got this inverted head and shoulders bottom. I don't want to focus on it, but if we spike back to 5% in the 10-year, I think, we're going to be back below that 200-day, watching 55, 75, 5700 as areas where it's still progress. We're still walking. We're off those lows, but for people thinking we're going to snap our fingers and make new highs, maybe Nvidia can do something to help us get there, but right now we've got a lot of wood to chop before we're on that run phase.
Is this essentially a healthy reset,
I think so.
Okay.
I mean, given what this market has absorbed, we got the worst case scenario out of the way with the tariffs and that, not the big beautiful bill, but that little Liberation Day chart where it spooked investors. We had the washout. Now we're slowly walking it back. We're trying to find a level where we can negotiate. What we've done is we kicked the can down the road to 90 days. So we're talking late June, early July. And we're going to slowly revisit these topics on tariffs and see where we go from there. So we're not going to make new highs.
Volume's been a little bit lower. Is that just kind of normal for this time of year?
It's normal. We're going into a 3-day weekend. Summer's here. Sell May, go away. I don't know where these people go. I want to take me with you. No, we'll see volumes diminish. They'll pick up Friday. It's an expiration. But I'm not too concerned about the volume in the moves that we've seen. We're seeing the pockets where they need to be, where we're seeing earnings, the retail, sales that have come out, the results from some of these big end retailers. Those have been fascinating. The volume has been there in pockets, but overall, no. People are kind of off to the sideline waiting for that next shoe to drop.
So it doesn't show a lack of conviction, it's just seasonal?
Yeah, I think it's a little of both. I think sentiment shows the conviction's not there. Sentiment is still at historical lows, which as a contrarian, that's not a bad thing. People had to chase this market, and now we've gotten to that equilibrium point where I don't know what's going to take us higher outside of Nvidia's earnings, because that has the potential to lift the semiconductors, to lift technology.
It does, but, and look, a lot of the Mag 7 has made quite the recovery since, early April. But with Nvidia, one of the things I've noticed is even in recent, at least on their last quarter, it might have been the quarter before that as well, even when they beat and raised, they've sold off right after that.
Exactly my point, which I'm going to make next week in my newsletter. You're writing it for me, so thank you. We have to watch that 150 level in Nvidia. We're around 134, 135 right now. For it to get back and break above it, it's going to take an epic beat and an epic guide and some potential news that we don't even know right now. I cannot see a scenario where all of a sudden we're breaking out and then everyone's participating. There's still too much uncertainty, word of the year, for them to, lift us and the entire market with them. I hope I'm wrong. I would love to see Nvidia break above 150 gap and take us to new highs, but we've seen so many times before just in this stock where they've had great earnings, solid beat, solid guide. It just happened last quarter, and the stock was unable to maintain momentum. So we'll see where it takes us.
Let me ask your views on the Fed. The market seems to be pricing in more rate cuts than we hear economists expecting.
Yeah.
Who do you think is right?
Well, the Fed has changed their tune. Instead of one data point at a time, they're looking at more of the soft data, that sentiment and the fear of tariffs, which, of course, we're fearful. Nike raised prices today.
Yeah.
It's up 2% because they're back with Amazon, but they raised prices and they didn't blame tariffs. That's the new narrative now that the president kind of threw
You
Walmart
can't
under
blame
the bus.
tariffs, exactly.
Don't blame
But that's
tariffs.
what
You know,
Walmart
we
did,
may have to
yeah.
raise, but we're not going to blame tariffs. But
Yeah.
but getting back to the Fed, they have the data to cut us 1/4 point. Based on what they said in December, to end the year to start this year, we can go down 1/4 point. It's not going to upset the apple cart. Will they do it? Right now, they're at a sweet spot. It's kind of a Goldilocks moment for them. So let's see what the PCE comes out. We have a lot of data between now and that June meeting. So I'm not, in a position to say, yeah, the Fed's going to cut 1/4 point, but I think they could. We'll see what Jerome Powell does. He doesn't want to, look like he's giving in to pressure on Washington.
I know. Yeah, he doesn't want to look political, so that's one of the challenges. It feels like it's a balancing act between both the data, but also not sending certain signals and, not giving a tell. All right, Jay, thank you.
You're
We always
very welcome.
appreciate your
Always
time.
good to see you.
That is Jay Woods, Chief Global Strategist, Freedom Capital Markets.